Hello, everybody. Today I am going to tell you about investing and what to do with your own money. Okay, I'm making this video just because way too many people have asked me about what to do with their money, and they know I have been investing in stuff, and they have no idea what to do and what does it mean by investing and how to save all that stuff. And besides that, I was figuring out these things for myself. I had some money and I want to know what happens to it over time, and will my money be valuable enough in the few years, or what will I do and all that stuff. Okay. So first of all of you want to invest, all of you want to be rich when you are old, and you all think you don't have enough money to invest. First of all, you don't have to be rich to invest. If you just save like $100 a month, it is going to be a lot, and we'll see in this video how. If you could save a bit more, it will be amazing. And I generally say you should save like 10-20%. We'll talk about these things more. So, first of all, how did I learn about all these things? I like to read a lot. So, first of all, I did was read this thing. It's called the Retire Early Sleep Well book, and it's mostly like about maths and different strategies and stuff. This is a very good book. If you can, should read this. And the other thing I did was read what famous people do, like Warren Buffett, Mark Cuban, and a bunch of other investors. You can see what they are buying and selling and how they became rich. So we will get started now. All right. The first thing we are going to do is figuring out why keeping money in your bank is a bad idea. For example, I tell myself, hey, I save a lot. I put like $100 every month into my account, and say like in 12 months I'm gonna have $1,200 in 5 years. So 1,200 into 5 is I'm gonna have $6,000 in my account. But you know what? I'm actually losing a lot of money by doing that. I'm not accounting into the fact that things get more expensive every year, and which is inflation. So in USA, the inflation is around 3%, and in India it is around 7%. So let's take a moderate one, the 3% one. So if I have to buy something today and I pay $100, the next year I will have to pay $103 for the same thing, because things get expensive eventually. And this doesn't happen every year in January. So one of my friends thought this happens every year in January, things get more expensive. This happens throughout. Like every day, things are getting a little bit more expensive, like fuel or potatoes or onions or tomatoes or whatever you might buy. Internet, rent, electricity, all these things get expensive, then that is required for the economy to grow everywhere in the world. So if you just keep $100 in your bank account, in 1 year, their worth is like $97. So whatever you could buy for $100 right now, the next year your bank account will only be able to afford $97 of worth of stuff. And this is in 1 year, okay? So in 2 years, it will be 94.009 at 3% inflation. In 5 years, it is going to be 85.87, and in 10 years, 73.74. So just by keeping your money in your bank account, you are going to lose 27% value of your money in 10 years just by saving every month. You're doing good and you are saving every month, but you're still going to lose money because of inflation. So to counter interact that, you have to make a profit at least equal to the inflation rate. Okay? Which means if you are in USA, your money should grow every year by 3%, and if you're in India, you should grow by at least 7% every year. Otherwise, you are losing money for no reason at all. Because, I mean, like, reason is inflation, of course. Okay, so how do you do that? The thing is, you do is invest. And what is meant by investing? Investing means buying and selling assets. An asset could be a cryptocurrency like Bitcoin or Ethereum, and stocks or indexes and stuff like that. The first thing, this is not my day job. I am an engineer. I like to code. I don't want to check the stock market every 30 minutes. I don't want to worry about my money. I just want to do all the maths and everything right now, and I want to make sure that my money is safe. How do I do that? The simple rule is to diversify. What does it mean by diversifying? For example, if I put all my money into tech industries, for example, I'm buying Google stock, Facebook stock, Twitter stock. Let's not buy Twitter stock right now, but though, Snapchat stock and stuff. This is all tech industry. There are other more industries in the world like agriculture, real estate, and so many others. So what you want to do is that you want to bet not just on one industry but on all the individual ones as well. You want to average out your income, because if, for example, tech goes down, it is very improbable that everything else will be down as well. The world needs food, agriculture is up. Maybe something would happen in one industry, so you minimize your risk. The more diversified you are, the least the risk is, and also less the return. So I don't want crazy returns. I want just to beat the inflation rate at first, okay? And I just want to just keep my money in the bank. This is not a get rich scheme. This is just to make sure my money is valuable in the future. That is it. All right. So how do I do that? I had to figure out what is the safest way to invest. I want my put my money somewhere and I want it to grow at a moderate rate. So what I learned was index funds are amazing for that. And index funds are not mutual funds, okay? You should not buy mutual funds actually. So what are these like index funds? Okay? You're going to see it now. So index funds. So when you trade on stock market, you can buy or sell one stock. You can buy a stock or you can sell a stock. And for example, if I'm buying Google stock or Facebook stock, I'm only buying that stock. An index is a collection of a lot of stocks. For example, S&P 500, okay, is a collection of 500 biggest companies in the world. This is one of the nicest indexes which exists in the world, and a lot of other organizations maintain that. What does it mean? That Vanguard follows a spec. It has 500 companies in there, and there's an average price of all the stocks which they figured out, and you can buy that stock. By buying that index stock, you are investing automatically in all the 500 companies, a little bit portion of it. By doing that, you are diversifying and you're minimizing your risk. The one I was like, okay, this is good and this is average out, but how much return it gives me? I was listening to interviews and stuff, and I saw Warren Buffett say that he will give $1 million to anybody who can beat S&P 500 in a 10-year run. In 10 years, nobody can beat S&P 500 ever. Like the smartest man on the world, whatever it may be, any mutual fund, they cannot beat this thing. And if this cannot be beaten, I should use it. And it's very easy to use it. Now I'm going to show you how to like buy and sell stocks. Okay, and there are a lot more index funds. There is, and I'll show you on the app. So this is the app I use. Okay, it's called Robinhood. And I'm going to search for Vanguard is a good company to buy stuff from. So Vanguard is just a brokerage, you can say. And you can buy index funds from there. For example, this is S&P 500, okay? It is going pretty good today. But we'll see it in 1 year, it grew by 24%. And in 5 years, it grew by 103%. So your money would actually have doubled in 5 years. This is like a lot better than you can expect for any of the stocks. And there are a bunch of other stocks. Like this is the emerging market stock. You can see how much it did in 1 year, and then you can see in 5 years. It did not do a lot better in 5 years because there was a giant dip. Something happened. This was the Great Recession. But always think in the way that in the long term, markets are going to come back to their original values. That always has to happen. And it has happened in the history so far. Okay, and this is total stock market. In 1 year it made 24%, in 5 years it made 102. And there are a bunch of other stuff. I actually buy a little bit of each of these. The other one which I like a lot is iShares. It's also a respectable and big company. and they have different indexes. So this is an index of 2,000 companies. 1 year, 27%, and you can just like place a buy order. I can buy one stock and I review it, and I can just like buy if I want to. All right. So these are indexes, and come on. So the thing I was going to tell you about: do not buy mutual funds. Come on, you gotta be smart. Whatever you might do, SIP or whatever, like SIP or whatever, do not buy mutual funds. Why? First of all, check how much are they giving you profit every year, and then check how much profit they made in the last 5 years, and then compare it to indexes. One great tip I will give you is that try to invest in India. Why? Because Indian markets are down right now because of GST and demonetization. All the economy is down. So markets are down and everything is cheap. Real estate is cheap. You can buy properties right now for really cheap in India. You can invest in the stock market, and ESC does really well on average. Like usually it is running at 18% per year, which is like crazy. But India is a fast growing economy, I mean. And this is what it means by fast growing. It is growing at a really fast pace as compared to USA, which is more stable and less risk economy. All right. So we have covered these things. Why not to buy mutual funds, and you should buy indexes. I would say try to buy different kind of indexes from Vanguard or iShares or BSC. And if you're in India, there are pretty similar apps like Robinhood, which you can use. The other thing which I recommend if you are in USA is just go to Wealthfront. This is an amazing app. So if you would have read this book, this book tells you about different strategies and stuff you can do. So one of the strategies it says in terms of maths is how to combine your different stocks. So you should buy a percentage of mid value companies, large value companies, ETFs, S&P 500, and there are like 8 or 9 things in there. And this app will do it automatically for you. So you can set up an auto payment. You can save like $100 every year. Okay. I think I forgot to do that. Let's see. If you save $100 a year, and if your money is increasing by 10%, okay, in 12 years you will have saved $8640. And if you are increasing everything by 10%, you would have saved $17,280 just by saving. Oh, sorry, this is a 7.2 7. So in 7.2 years, your money will become this. This is the rule of 7.2. Okay, you can Google that and you'll see what I mean by that. So yeah, this is the money you make. You would have saved in 7.2 years, and this is the money if you invest and it made a 10% average return. This is how much money you get in the end. So it is stupid to keep your money in your bank account and not save or invest in a save index fund. The other thing I'll tell you about is cryptocurrencies like Bitcoin and Ethereum. So cryptocurrencies are a lot like stock market, I would say. I will not go into much detail because this is more about investing. A Bitcoin is going for around $7,000. Ethereum is for around $300 something dollars. Okay, so the one thing you need to remember, you can buy any amount of Bitcoin or Ethereum. You can buy $10 worth of any of these you want. In USA, you should use this app called Coinbase. This is very good. And if you want a referral, I can give you a referral. I get $10 and you get $10 worth of Bitcoin. And it's a pretty easy app to use. Like you just go there and you put the money, how much you want to buy Bitcoin and Ethereum, and you can buy that. I would recommend do not buy Bitcoin right now. It is too high. It was $4,000 like a month ago. It doubled, kind of, in like 2 months or so. You should instead buy like Ethereum. It's at 300. It is the second biggest currency after Bitcoin. It's doing pretty well, and I believe it will do really well as well in the future. Anyway, so we are about at the end of the video. If you have any more questions, you know where to reach me, or send me a text or whatever, and I'll let you know more. Bye bye.